Hello, everybody. Welcome back to another market close. It is Friday, May 3rd, 3:45 p.m. We have officially got through the week, and we're here on a Friday, and it is May, so we are in 5 months into the year as we head into the first Friday of this month. Today's been a very interesting day in the broader markets. We've had some news break over the past couple of hours since I last saw you guys on the market open. And a bunch of interesting things. I actually found out a couple of quotes by Carp that were really interesting that I want to talk about. Palantir earnings will be on Monday. That's going to be an exciting one. Some questions around the options market around Palantir. Nvda trying to get back to $900. Absolutely incredible momentum by Nvda right now at 887, but it's up 3.4% in the day. I don't think anyone expected Nvidia to try to bounce all the way back to 900 at 1.891. Right now at 887. And then Apple continuing its momentum, the broader market continuing its momentum. Apple right now, 184, up 6.46%. At one point, it was at 186. S&P at 511. S&P was down a little bit on the day when we had that ISM services data that I want to talk about for a second. But S&P at 511, up 1.27% on a Friday. Who would have thought? The only stock that's red that I'm looking at right now is SoFi. Pretty much everything else is green on my screen. So SoFi is down 1%. But besides that, we are pretty green. Thank you all for the birthday wishes. Again, I appreciate it so much. Every day I grow older, and I just bask in the glory of how old I'm becoming. So thank you all for being here. We got a lot to talk about. Alan, Ian, Lowat, let's get into it. Garcia, what's up? K Katana says Amit said good night, everybody, at the end of the morning stream. Everyone say good morning to him this stream. That's a good one. I haven't heard that type of comment before. I appreciate that. Garcia, Eric Wood, PayPal's also red. That's correct. Adele, Big Billy, Alan, Nolan, Victor, Jacob, June, Shem Pasta, Peter. What's up? What's up? Oh, wow. Kelly in the chat. Kelly, how you doing? Ian, good morning. Good morning. Good morning. Ray, sorry, Amit, you've gaslighted us way too much. We know it's your birthday. Yes, that's what's going on here. That's exactly what's going on. It's the gaslighting of the chat. That's what I'm doing. All right, Missy, Raj, Tim Till, what's up? All right, let's get into it. So a couple things I want to go through, and then we want to get into Dan Ives and get his take on Apple. First thing I want to talk about is the macro, and I want to discuss some of the things going on in the macro, particularly around the ISM services data and the jobs numbers that we got. So if you weren't here in the morning, we got jobs numbers. Also, we got a Palantir upgrade. We got to talk about that by Jefferies. Very peculiar upgrade right before earnings. So this was the jobs report this morning that I thought was very, very interesting to go into. And that's why the market was green initially. So non-farm payrolls, 175 versus 238. Nice cold jobs number. Average hourly earnings month over month, 0.2 versus 0.3. That's also very good. And then unemployment, 3.9 versus 3.8. Still kind of that Goldilocks zone where things aren't super intense in terms of the softening of the economy, in terms of the slowdown of momentum, but they're also not really hot, which is what we need. We need Jay Powell to say that this will slow down. One could argue Jerome Powell saw this jobs report before he talked on Wednesday at the FOMC meeting. And basically he knew that the jobs would come in better than expected in regards to being colder versus hotter. And as a result, he had the privilege to be more dovish based on seeing those numbers. So that was the first thing that was good for the market. And then this was the second piece of bad/good news we got for today. Jobs data came in much colder, but then ISM services PMI came in below 50. This is the lowest level since December 2022. That's a big deal. Market was expecting 52. Last month, we had 51.4. We came in at 49.4. This is the services index for how much services are growing in the broader United States economy. And below 50 means you're contracting. Above 50 means you're growing. We were below 50 pretty aggressively. And in some places like the new orders, we were at 52.2 versus 54.4. I mean, that was just incredible data. So initially, the market kind of tanked on this news when it came out, and I was confused because it didn't make sense why the jobs data being bad, which means it's good, was enough for the market to go higher, basically signaling inflation was going to come down, rate cuts were going to happen sooner than expected. But the ISM data, which was more aggressive on the idea that inflation is definitely coming down and rate cuts are going to happen sooner than expected, like that data tanked the market almost to 509 on the S&P. Well, now we're rebounding. So it seems like as we got through the initial reaction to the ISM data, the jobs report and the ISM data was good enough to get the market to have a nice little rally. I think we're basically at a intraday high for the S&P 500 right here at 511.28, or we were at 511.76, right? So basically at the intraday high, which is good. It means that the data that showed the economy is slowing down slightly, which should help inflation slow down significantly, is being factored into the market. And now futures options are pricing in 2 rate cuts. Before, they were pricing 1 rate cut at 8:29 this morning. At 8:30 it changed, and they're pricing in September versus November for the first rate cut of 25 basis points, which would be good. I mean, that would ultimately be really good. So that's what we had in terms of the macro stuff, and that's why the market is doing pretty strong. Robinhood right now, where's Robinhood? Palantir at 23.28, Robinhood 17.92. Robinhood was at 18 of a little bit during the day, then sold off. Palantir as well was at like 23.50, 23.64 at one point. It had a nice little candle. Now at 23.28 on the day. Let's listen to Dan Ives, get his thoughts on Apple and what's going on with that, and then we'll get into a bunch more macro stuff as well. Here's Dan Ives on Apple.
Dan Ives joins us here at Post 9. Keeps an outperform, targeted 250. Happy Friday, Dan. Good to have you.
Too.
Overall thoughts on China? I guess let's start with that.
Backwards against the wall. China came in much less bad, I'll call it, than anyone feared. And it's what we saw. I mean, we started to see a turnaround in March, I think going into April. Now, granted, these are not phenomenal numbers, but now you're on the trajectory to see growth again in China. I think it just comes down to when you bet against Cook and Cupertino, you've been proven wrong again and again. This is another quarter I think they came through.
You think we get plus signs in China this year?
I think in September quarter, you start to get growth in China. And this leads to what I believe, not just from an AI perspective, next 6 to 9 months, it's going to be an AI-driven super cycle with iPhone 16. You look at China, 230 million iPhones. You got 70% of them have not upgraded in the last 3 years.
But it's limited growth, isn't it, Dan, overall?
Yeah, I think for this quarter, of course, limited growth. But Sarah, I think when you look at next 6, 9, 12 months, that renaissance of growth is coming back to Cupertino, combined with the AI story. So to me, when you look out, this is actually a time, I believe it's just the beginning of the next phase of the growth story for Apple. But I think the most important thing in this quarter, just given all the doomsday about China being down 12, 15, 18%, it's not. You're actually starting to see a turn. And that's why Cook, 10% politician, 90% CEO.
He has some good metaphors. You can't lie. By the way, we'll have Dan on the channel in about 2 weeks, and we'll get all of his thoughts on big tech earnings and then Palantir earnings on Monday. So we'll get his thoughts on everything coming up.
How important is June 10th? How important is that announcement going to be? Put it in perspective in terms of other highly anticipated moments from Apple.
Yeah, it's the Super Bowl for Apple. I mean, if I look back the last 4 or 5 years, it's probably the most important moment because, as me and you have talked on the show, this is really AI coming to Cupertino. It's showing not just on what I believe will be on the iPhone 16 in terms of the LLMs and the exclusive features, but it's about the developers, services. That's the Rock of Gibraltar for Apple. And I believe this is going to be, it's going to be a historical moment, not just for Apple, but showing now that AI is coming to the consumer, being led by those 2.2 billion iOS devices.
You know, Dan, the CapEx numbers from the other mega cap tech players are just mind-boggling. We don't really know, though, exactly what Apple spends, do we? When it comes specifically to sort of AI, generative AI, do we have a sense as to what they're doing?
I mean, we believe it's going to be up 40 to 50% in terms of AI CapEx this year, because I think Apple recognized, and Cook's talked about, I mean, behind, you know, clearly competitors, you saw obviously the EV initiative that they ripped the Band-Aid off. Now it's all in deep end of the pool on AI, and that's the right strategy because we believe when this is all said and done, it could add $40, $50 per share of the story in terms of services that could be an incremental 8 to 10 billion. And what will drive the AI-driven super cycle with iPhone 16? You look at that China story. This is just the start of that turnaround. I think it's going to be a Brunson-like moment for Apple and for Cupertino as we start to see this play out.
Did you tailor that just for David?
Was that for me? Was that a new one in your repertoire?
That's one I just unveiled right here.
Okay.
Brunson is Jalen Brunson on the Knicks, who's playing like Michael Jordan. So that's why, for those that don't get it. So, look, I think Dan Ives has a point there. Again, I'm still a bit skeptical about this whole idea that the AI iPhone is going to be so incredible. But I mean, if it is, then that's what's going to get the street excited. There is like, I mean, the thing about Apple is like this thing could run to 225 and the market could be super excited. Dan Ives has a 250 price target because everyone loves Apple. They love the buybacks. They love the dividends. Even if you can say that's financial engineering, it doesn't really matter. The street loves it, right? And so if the street loves it, if they announce anything that the street perceives is exciting to engage in, it's going to pump. The question just becomes, is the pump going to be meaningful enough to sustain itself? After the Vision Pro, it did pump as well, but the Vision Pro didn't really work out. And by the way, I was going through the earnings call yesterday, just like the transcript, they barely mentioned the Vision Pro. I mean, it was like once or twice and it was in passing. And ironically, none of the analysts really asked deep questions about the Vision Pro either. So I think they all kind of realized it doesn't matter that much. And, we're just going to move on from it. The AI iPhone can't be that same story. And if it is, then it's going to be tough to see how Apple, is going to play out. Jake says how Apple and Tesla have gone up after earnings is crazy. Yeah, I agree. I mean, what's really interesting about Apple and Tesla in particular is that they didn't have good earnings. They just had a good story. Apple's story involved dividends and buybacks. Tesla's story involved FSD, and the street ate it up. And as long as the street needed to eat it up, that's what you needed for shareholders to be rewarded. Another thing I want to show on jobs. So we got the market closing in about 4 minutes. Here's one thing that I thought was really interesting. As you can see, job growth came in 175,000, well below 240,000. That was the estimates. And this is what happened to S&P 500 futures. As soon as those numbers were released, stocks went up, right? Or at least the S&P 500 went up and a majority of stocks went up. So it really is an idea that stocks like soft job numbers. Right now, stocks, and I think a year from now, stocks might hate soft job numbers because that could be a slowing economy, which means bad earnings. But for now, stocks are reactionary to inflation. And what derails inflation is less jobs, which influences stocks. And by the way, we're seeing that here in the 10-year. I mean, the 10-year, 4.5. We haven't had 4.5 in a while. We were hovering around 4.7 basically for the better half of 3 weeks now. So seeing that coming into 4.5, actually exciting to see that the bond market's reacting in the same way that we wanted them to react when it comes to stocks. Are you selling any covered calls on Palantir? I'm actually not. I was thinking of doing it. And whenever I think of selling covered calls on Palantir, I just remember like, what if that sucker runs? It's like, yes, you can roll them and it's not that scary, but still, it is a little like, you just never know, dude. You just never know. You just don't know. We went up 30% last time. This time, if we go up 30%, we'll be at $30. I don't know if that's going to happen. I would say odds are it's not as likely as it was last time because we're off of a bigger base and because the macro is not the best. But could we run to like 27, 28? Yeah, it's very possible. And so I'm not sure even what the best strike is for the covered call. We did get a price target upgrade from Jefferies today, 22 to 24 on Palantir. Really interesting that they upgraded us. Jeffrey has been a bit more conservative historically, and I think the reason they're upgrading us right before earnings is because they know that earnings numbers either are going to be good or that the growth projections, the estimates, are going to be better than what we think. And if those growth estimates and projections are better, right? Like Palantir raises guidance from 19.9% to 22.3%. Yeah, we're probably going to see a $24 stock that's going to be very easily built to be a $24 stock, and the entire street is going to then follow Jefferies and upgrade them. And Dan Ives already has a $35 price target. Mariana from Bank of America, $28 price target. It wouldn't blow my mind to see us get to those levels. The only way I see Palantir kind of tanking, and we'll talk more about this after the bell, the only way I see them tanking is if they not only miss on their numbers, which they're not going to miss, but let's say they slightly beat or they come in line and then they don't raise full year guidance, which maybe they'll do in Q2 or Q3, right? Well, realistically, you do it in Q1, right? Whenever it's full year guidance. So if they don't do that, I could see them maybe struggling at like 21, low 20s, but to go below 20 and to do basically a 25, 30% decline from here, I don't know, dude. It's going to be tough to see that happen. I just don't think that's going to happen. Which is why I think selling puts and getting the put premiums for like $20 strike, $21 strike, I think those are actually really reasonable strategies to do. But selling covered calls and having your shares get called away at 27, if anything were to happen, that's a little bit more risky, right? I think it'll be a good earnings. Well, we will have Palantir Weekly tonight, even though Arnie won't be there. We'll have some other guests. So Palantir Weekly tonight at 11 p.m. and we'll discuss everything on the earnings preview. Most of us feel it's going to go well. I think it's going to go well. And then it's just going to be a question of how the stock reacts. Friday, May 3rd, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, here we go. Markets are officially closed for today. What do we have here at the close? We have Palantir 23.33, 3.44% on the day. Not a bad day for Palantir. MicroStrategy 8.29% on the day. MicroStrategy probably deserves that. Bitcoin at around 61,500. So nice for Bitcoin. We'll talk more about Bitcoin in a second. Apple 183, up 5.97% on the day. DJT down 2% on the day. PayPal down 2%. That's just stupid. I don't know why PayPal's down, but PayPal's down. Google 169, basically flat on the day. S&P, nice 1% down on the S&P. Again, moving the S&P 1% is not easy. If you think about the S&P on average, every year it moves 8%. So it just moved 1/8 of what it does on a yearly basis in one day. That's why moving 1% on the S&P is definitely important, and it signals that, you know, maybe the market's a bit more excited about either some data or some news that we've gotten, which today that jobs data and the ISM data was enough to get the market more excited. Novix was up 7% on the day after being up 45% yesterday, so that's great. Enphase ending the day at 114.2, up 7.67% on the day. Big day for Enphase again. Interest rate sensitive. Interest rates might come down if inflation comes down. That's what the jobs data pointed to today. That's why Enphase is up. Robinhood ending the day at 1792. Nvda 887. Nvda hell of a day as well. I mean, you would think Nvidia takes a breather after falling from like 970 to 778, but the dip gets eaten up. They have earnings in about 20 or 18 days, and so I think people are getting really excited for that. Hershey's had earnings this morning as well. We forgot to cover that. I think they beat on the top and bottom. Hershey's today, they EPS they beat by 10 cents, 307 versus 279, and then revenue 3.25 billion versus 311 billion. So they beat that by 4.6%. Market didn't reward them too much. I think in Q2, as those cacao prices come down and Hershey's costs come down, that should be a tailwind for Hershey's as well. Bitcoin, wow, 62,000. All right. So as we get to the end of the day, 62,000 here on Bitcoin. Nice to see some love for Bitcoin. And, you know, it was below 57 at one point. So it's a nice little reversal. The question is going to be, can Bitcoin maintain this pump over the weekend? We'll also call Steve in a bit. I just talked to him. So we'll call him in like, 20 minutes, and we'll get his thoughts on what's happening in the markets and before Palantir earnings. But Bitcoin right here doing nice at 62,000 as well. What else do we have on Bitcoin? Oh, yeah. Let me go to some of the Bitcoin stocks. So here we have Robinhood at 1792, CleanSpark, a nice day at 1.32%. At one point, it was up like 8%. So not super green, but still green on the day. Coinbase, unfortunately, I mean, just got hit after a good earnings, but I guess not good enough for the street because it's already rallied too much. That's the risk with Coinbase. It's rallied 700% from the bottoms a year ago, and it's just hard for the market to keep giving it love. Riot up 0.19%, Marathon up 2.64%, and then MicroStrategy had the biggest day, up 8.29%. MicroStrategy just got sold off pretty aggressively. All of this contingent on Bitcoin. Now, over the weekend, if we can get Bitcoin to try to get closer to 65,000, and that's basically based on if the ETF data we get today is good with inflows and less on the selling by Grayscale, then we should get some more momentum. Two big catalysts for Bitcoin over the past couple of days or the past couple of weeks have been the Hong Kong ETFs that officially went live and the sovereign wealth funds that BlackRock's head of digital assets basically signaled are starting to become much more active, and they're starting discussions again about what their allocation could be if they were to invest in Bitcoin. If that money comes in, then I think Bitcoin has more momentum built into it. But until that money comes in, it's going to be a little tough to see, how large Bitcoin can get after it's rallied basically 57% to start the year. So we will see what happens with Bitcoin. But right now, that's what we have there. What else do we have in the semis? We have AMD also had a good day. I mean, AMD up 3%. AMD fell nasty 9% a couple days ago. So we got AMD is green. Intel, nice day, 1.28%. SMCI, 2.65%. Taiwan Semi, this was absolutely a buy the dip after earnings. So Taiwan Semi right here. We go past over the month. So this is where it fell. It fell to 124 on earnings, which is just dumb because it was a demand problem, it was a supply problem, not a demand problem. So it's not like they were struggling. And now they're at 142. So back to being a $734 billion company. ASML as well. Wow. Look at ASML. Recovered all of its earnings dump. Look at that. Fell to 849. And now it's back to 904. Not too bad for ASML either. Intel, $30.90. And then ARM, this one's overvalued to me, but this one's up 3.79% on the day as well. So the the semis did what they had to do. Crypto stocks did what they had to do, even if they weren't super aggressive. Bitcoin did what they had to do. And then the Mag 7, I think, had a relatively decent day. Apple, again, had a great day. Microsoft was up 2%. Meta was up 2.35%. Meta back at 450. It was stuck at around 420 for a good couple of days. Google, 169. Amazon, oh, wow. Amazon's 186. Look at that. Amazon is $3 away from its all-time high. Amazon fell to 175 after earnings just because we had some bad data. But Amazon back to some good levels. And then Nvidia right here, 887. Even Tesla had a decent day, up 0.63% on the day as well. I don't know why GameStop is mooning today. GameStop, what, is up 29%? Okay, something has had to happen. Wow, I didn't know 29%. Let's see. Why is GameStop up? GameStop, I'm looking at some news. GameStop, I don't see any news. Why is GameStop up? That's an interesting one, dude. GameStop, huh? 27%. Dude, it looks like it's just, honestly, it looks like there's just, what I'm looking at on Twitter is a bunch of like apes saying that the shorts will never kill us or something like that. Like I'm not seeing, it's a squeeze, right? Yeah, it's squeeze. That's what it feels like. It's a squeeze. It doesn't seem like there's anything that interesting on GameStop. Huh, that's interesting. GameStop pumps 30% in the day. What was the volume on GameStop? Volume on GameStop was 34 million. That seems to be above their average. Market cap now 5 billion. It's crazy. There's still some people that believe in it and they're holding it, and they might end up being right if this thing pumps. 1 month, it's up 42%. Interesting. You got to watch out for insider selling now. I mean, dude, GameStop is so shady with their management. They don't do an earnings call. They don't answer questions. They just put out the numbers and then they leave. Like it's always been so shady to me. And also, dude, what is GameStop realistically going to do to save their business? Like they have this whole NFT thing. That's not going to happen. No one shops at the stores anymore. They're not going to transform to digital. Like people aren't buying games online like that. So I really don't know what the value is of buying GameStop outside of the pure memification of it. But it's up 20% today. So I guess that's exciting. No earnings call. Yeah, they don't do any earnings call. It's weird, dude. It's really weird when it comes to GameStop. It's I don't get how shareholders could deal with that, but like they just accept it. They're just like, yep, GameStop can do no wrong, and there's not going to be any problems. All right, let's get some decent analysis here by NYU professor who talks about valuations a ton. Ashwat Damodaran, probably saying his name wrong, but he has a pretty good perspective here when it comes to valuation. I don't think he's been wrong this year, but he has been saying that things have been a little toppy. Let's get his perspective on how things are looking like now.
Earnings out of the way, are those names overvalued or not? Let's ask the Dean of Valuations, Ashwat Damodaran. He is the Professor of Finance at NYU's Stern School of Business. Professor, welcome back.
Thank you for having me.
I'm going to get to that in a second, but I want to zero in on how we first teased the segment here and why you told our production staff that May is going to be the month that determines how returns for the year will look. Why so?
I think the first quarter was all wine and roses. Everything was great. Everything looked like it was coming together. The economy was staying strong. Inflation looked like it was coming down. And I think in April, you saw the dark side of inflation, that it stayed stubborn. And you started to see the first pieces of evidence of maybe not a recession, but a slowing down of the economy. And I think that's why I think the market's at a tough time last month. The question is what happens going into May, because it's not just the facts on the ground, it's the mood and momentum that's driving the market. And I think, you have a good day today. I think that's a good way to start the month. But I think there'll be more tests coming down this month. And if we don't have a good month, then I think we're heading into September from a position of weakness. And we know the politics are going to take over that. You're going to have an election. You're going to have things happening.
And historically, sell in May, go away has been wrong for the past 10 years. Only 2019, we had a bad month. But usually the S&P is flat or green slightly in the month of May. And then June, we see a bit of a sell-off.
And I think you're going to have a lot more stresses in the market. Better to do it when you're in a position of strength.
I'm truly interested to know, if I would have interviewed you on Tuesday, your answer to where your market view might be could theoretically be different than it is today, given what happened with Chair Powell and how he wasn't as hawkish as feared. And now that we finished mega cap tech, is that a fair assessment? Do you have a different outlook based on what happened this week, both through the Fed meeting and the data?
I think we're resetting expectations again. I mean, we've been doing this for 2 years, and we're constantly trying to figure out, hey, what is the future going to deliver? And I think it's amazing, and you're right, over a period of a week, how expectations get reset. And it's almost like the expectations are getting reset to, you know what, we're going to have slower economic growth. The Fed's going to be okay with it. Because I think there was a point last week or so where people were talking about the Fed potentially being able to raise rates, not lower rates, because inflation is back, the economy might be harder than expected. So I think that expectations get reset, but today we have a good day. So,
Yeah.
But who knows what the next week will bring in terms of expectations getting reset.
But has it also in turn reset your view on where valuations are? I mean, at 5% on a 10-year, perhaps valuations of the S&P 500 look stretched. Maybe not so much. Maybe not at 4%.
And I don't think it's debatable. I mean, we've been stretching valuations, and that band is getting tighter and tighter. I mean, I was quite open about the fact that I own all 7 of the Mag 7 stocks. None of them is undervalued now. The reason I own them is I bought them at convenient prices, and I don't think they're overvalued enough to dump them. But I would be buying any of the 7 today, perhaps with the exception of Tesla, which, at least based on my valuation, is pretty close to fair value. The rest are stretched and getting more stretched by the moment. Alphabet and Nvda in particular keep pushing the upper limits of what I think value can bring. But as trades, it still might be great trades for the rest of the year.
Wow, I'm surprised to hear you say that about the group as a whole. I think some would look at, let's just use Alphabet as an example.
People don't know he's bullish on Tesla. If you actually watch, he has a YouTube channel, Aswath, and he has an entire valuation model on Tesla for like a couple hours. He actually believes it's fairly valued, if not undervalued right now, which is a bit contrary because most people think Tesla's super overvalued, but that's not how he thinks about it, particularly from the energy side of the business.
And you can throw Meta in there too, as having valuations that are certainly much more reasonable, they would suggest, than being anywhere close to overvalued.
I mean, I think, if you put in 12, 14, 15% growth rates, you can get to the value. But I think the most interesting aspect of what's happened in the last couple of months was both Alphabet and Facebook and Meta announcing they were going to start paying dividends. And that, to me, is an indication that within the companies, there's a recognition that they're more middle-aged than young companies. And I think the rest of the market might still think of them as these amazing growth companies that can keep double-digit growth going. But I think there's more realism in both companies as to what they can actually deliver in terms of growth.
And I think that's really fair. I mean, if you pull forward a lot of the demand that NVIDIA's had, the growth rate also becomes unsustainable to an extent, which means the question is the current demand or the current price taking in the future growth? And on NVIDIA, I mean, unless you're Loop Capital that believes they're going to do $175 billion of revenue in 2026, which is 62% above street consensus. I mean, like, maybe they do that, but if they don't do that, that's where maybe valuation starts to become a bit of a concern. The core thing for me here is that we all know eventually some of these stocks are going to have a pretty aggressive correction. Maybe they don't, but it doesn't feel insane to say, hey, I want to buy Meta at 400 or 430, right? Just given we know that there's no one else really competing with Meta outside of Google, or hey, Google at 160 in the next couple of years is going to seem cheap. Barring a recession that dramatically reduces the spending power of the average consumer, which means that the average business can't spend for that consumer, which means these big tech companies are not going to be able to get the benefits of all the AI spend they're doing when it comes to CapEx, or something like Google or Meta on the advertising front. So I mean, that takes all bets off the table. And maybe that does happen in the next couple of years. But if that doesn't happen, if we're looking at NVIDIA, right, Aswath says it's overvalued, but the demand for these shares is just astronomical. People want this company. And when you look at stuff like Sora from ChatGPT and OpenAI, like, it's just, it just seems like there's going to be more and more reasons for people to buy compute and buy GPU. Here's Sam Altman. I want to share this real quick. He was at a lecture over the weekend or over the last couple of days, and this is what he said on AGI and how we're going to get to AGI soon enough.
500 million. Whether we burn 500 million a year or 5 billion or 50 billion a year. I don't care. I genuinely don't. As long as we can, I think, stay on a trajectory where eventually we create way more value for society than that. And as long as we can figure out a way to pay the bills, like we're making AGI, it's going to be expensive. It's totally worth it. Whether
I do like that mentality, right? He's just like, dude, we're doing it. We're doing it. We're doing it. It's going to get done. We're going to make AGI, and it's going to be one of the most exciting things in the world. And so if that's the case, NVIDIA is going to get a lot of that GPU demand. They just delivered the first H200 to OpenAI, handmade, or not handmade, but like Jensen hand signed it. And it was the first one ever, right? It's probably going to be many, many millions more. Here's another thing I want to show you guys. I thought this was pretty funny. This is the reason why Apple is continuing to pump right now. I think everyone in the financial ecosystem recognizes that Apple's buyback program is a bit higher than Apple's revenue, just a tiny bit higher. And as a result of that, that is why Apple's pumping right now. A couple other headlines I want to show you guys. So, first, a couple things. Number one, Carvana short sellers have lost $3.9 billion as the stock has soared. Carvana today is, up another 4%. So Carvana for the week is basically up 40% or about 42%. So Carvana shorts are down $3.9 billion. Sucks to be a Carvana short, but that is the case. FOMC, again, we talked about that, and we talked about futures now pricing in 2 rate cuts versus 1. That was important. This part was also really interesting. This was a graph by Nick from the Wall Street Journal. I thought this was incredibly interesting. I don't know, what's going to happen based on this chart, but I thought this was important. The latest calculation of the SAM rule recession shows that the 3-month average for the unrevised unemployment rate is now 0.36 pp above the lowest such reading for the previous 12 months. This is the highest reading of the current cycle. So this is the difference between the 3-month moving average of the national unemployment rate and the lowest of the 3-month average from the previous 12 months. Now, what you could argue is that signals that there is a potential recession coming up and the Fed has to cut rates because unemployment is going to trend much higher than expected. Maybe that happens. Maybe that doesn't. I mean, I'm on the side that if it does happen, it's going to take a while for that to happen, just given where the state of the economy is right now. But if that were to happen, within the next 6 months, the Fed would have to cut within the next 4 months because hopefully they would see that coming, which means there should be a time for stocks to go up. That's the other interesting thing about this. If the Fed sees that unemployment is getting higher than expected, which I don't think the jobs data, the JOLTS data we got on Tuesday doesn't really show that it's getting as high as the Fed may think it's going to get. They're going to have to cut pretty aggressively before, and that period where the Fed cuts and before shit hits the fan, and the reason the Fed's cutting is because shit is getting ready to hit the fan. That's where I think the most amount of money is to be made, because that's when equities are still going to feel that they're in a risk-on environment, maybe crypto as well. And as soon as shit hits the fan, it's going to be risk off, which means can you get in and get out right during that time? And maybe that time is 10 months. Maybe that time is 10 weeks. Like no one really knows, but that is going to be something that's interesting to kind of to look at. Where's Bitcoin at right now? Is Bitcoin moving a little bit? And then we'll call up Steve and see if he picks up Bitcoin. Bitcoin right now. Wow, 62.4. Look at that green candle. It's actually moving a bit. Interesting. My opinion on PayPal, I like PayPal. I like it a lot. I think it'll do well. I think it's stupid that it's down right now. The earnings were phenomenal. And honestly, I think PayPal should be back to normal once we get one good inflation reading. I mean, like these are stocks that are they're broken stocks. They're not broken companies at all. So I think PayPal will be fine. Bitcoin 62.47. Robinhood's up after hours. Seems like because of that. CleanSpark's up after hours. Even Coinbase is up after hours after having a crappy day. Wow. I really wonder what's bringing the momentum to Bitcoin. I mean, Bitcoin's up $3,000 in the past 18 hours. I wonder if it's retail inflows or if there's some of those institutional investors BlackRock was telling us about a couple of days ago that are getting more excited for Bitcoin. I wonder, or is it just a basic buy the dip that a retail had? Amid status of your SoFi options, they're down 8%. So how much are we down? We're down like $900 or something on that. Good thing is those are 2026, and so we'll see those play out. Hopefully, dude. I mean, if SoFi can't be above like $10 by 2026, we're gonna have an issue. I think this stock is. Oh, by the way, Steve just wrote an article about these, so I'll pull up his article while we're talking to him. But I think the stock, again, same thing like PayPal, it's broken. The company's not broken. PayPal's not or SoFi's not a broken company, and hopefully that reflects that soon enough in the coming months. But yeah, Bitcoin right here, 62,480, not bad. at all. All right, let's call Steve. Let's see if he picks up. He just put an article out on SoFi, so let me pull up his article as well and see if we can get some coverage on that. Yeah, here's his article. He has a strong buy. Stephen Fiorillo, you are live with me on the market close. How are you?
How are you?
I am very good. I just realized you published a SoFi article. And so we can ask you about your thoughts on SoFi. Obviously, we just had earnings while we pull up your article at the same time. So I want to ask you about SoFi, Palantir, because we have that on Monday, and then anything else that comes to mind. But before we get into that, how are you as a human being? How are you doing?
Great. Did you see the option market for Palantir today?
Yeah, I'm not selling covered calls or anything, but it's pretty. The premiums are juicy.
The premiums for next week went up 30 to 40%.
Yep. I was thinking of selling.
Everybody thinks that this company is going to go to the moon next week and just blow out earnings.
I was thinking of selling $25 covered calls. I mean, the premiums were ridiculous, but
I told you what I did. I bought back my calls for June and I resold them for the end of May because it was a huge win.
Well, yeah, no, that was a good move. That was good. But are you selling any covered calls going into earnings?
No, I mean, I have calls I sold for the 21st or 27th, somewhere at the end of the month. So if Palantir blows earnings out, if it starts to go up a lot, I'll buy them back and rewrite another set.
Yeah, and rolling too is a fair thing to do. So I think there's a lot of ways to navigate it. But yeah, it's going to be exciting. Let's start off with Palantir, then we'll get into SoFi because I'm sure we have a lot to talk about SoFi. What are you expecting going into Monday?
I don't know. I listened to that quote from Karp several times, and I can't tell if he slipped or if he's just talking about last quarter.
The 70% quote, right?
Yeah, it's going to be interesting to see what he says on Monday morning. I'm expecting a lot of confidence out of the entire team, and I'm expecting a lot from AIP. And I think that they're going to
real quick, Steve. Let me just play that clip for everyone so they know what you're talking about. You'll probably hear it as well, but it's a 19-second clip. Here's what Steve is talking about, guys. This is what Karp said recently.
We do see a difference in commercial. We didn't give last quarter's results, obviously, but the quarter before we grew 70%, and we have a nascent and terrible sales force. We still grow at 70%. Imagine what a real sales force could do.
We still grow at 70%. Steve, do you think we're reading into it or he's telling us?
I mean, it can go either way because he could be talking about past tense very well. That we grew by 70%, we're growing by 70%. I mean, you could be very well be past tense with that.
Yeah.
But I think regardless, their growth is still off the charts for a company their size. And I think it's only going to get bigger because boot camps is a real thing. And I think that the number is going to surprise people about their conversion rates.
Right. I agree.
And I think that's the new metric that we need to look at is their conversion rates for boot camps if they show it. But I'm expecting commercial to go up a lot. I think it's becoming, this is something that's no longer going to be large enterprise. This is going to trickle down to the middle market and small market companies also. And I think eventually you're going to start seeing a lot of deals that are less than $1 million, which is fine because it is going to be a volume game at that point.
I agree. I'm retweeting your SoFi article right now. One more question.
I appreciate it. Thank you.
Yes, of course. I'll talk. We'll talk SoFi in a second. But one more question about Palantir. So, if the macro doesn't necessarily do the best, but Palantir does well, meaning let's say something happens in the macro, but Palantir crushes it, do you think the stock kind of has a chance to go below 20, or do you think it stays flat if the numbers are good but the macro isn't the best?
I mean, it sure felt like it wanted to go below 20 and stay below 20, and it didn't. I mean, it could. I think the thing that Palantir has going for it is $4 billion in cash, no debt, and they're growing and they're generating more free cash flow. They're generating more profit, and it's a product that's in demand. I mean, this is, I think it's an exciting company, and the company I've always compared it to is Salesforce. I think we could see a Salesforce arc in the next couple of years.
I agree. I think it's gonna be fun. It's gonna be very fun. Okay. Before SoFi, let's talk Fed real quick because I didn't get your thoughts on the FOMC. I think Jay Powell crushed it. How do you think that meeting went?
indifferent.
Do you think he just said the same stuff we were all expecting?
Yeah. There was no new information. I mean, the only good thing that came out of the meeting was he was very open that something really bad has to happen for them to increase. And that's what the market wanted to hear. And I don't think the market cares as much about when. Now it's just a question of if for cuts. And they're not ruling them out for this year. Look, I think he's making a big mistake. I think he should have cut already. I knew he wasn't going to. And I've consistently said May, June is where I think the cuts were going to come in. I was never in the March camp or 2023 camp. But I'm starting to think June, July. Instead, obviously now because the May meeting went, but maybe it doesn't happen until September. But he needs to cut. The bottom line is that when you have rates that are this high after such a long period of rates below 1%. I mean, don't forget, after the pandemic, the Fed rate was next to nothing.
Yeah.
There are companies borrowing money. And even before that, rates were 2-3%. You have a lot of companies that borrowed money cheaply. And when they go to refi, the interest payments on the new debt that gets issued may not fit their models. You also have carrying costs on the consumer up, especially on credit cards, and the interest on the national debt continues to go up. It's about $820 billion. There's debt terming from a Fed level in T-bills, in addition to real estate.
So you think we're getting a rate cut basically soon?
I don't think he has a choice. I think he's playing chicken. If he doesn't cut, if the Fed doesn't cut, it's very bad because if you keep rates at these levels into next year, you run the risk of ballooning the interest payments on the federal debt, and they will exceed $1 trillion because you have a couple hundred billion dollars of debt that's going to roll off and have to be reissued at higher rates.
Yeah, and I think
that's going to make the interest payment go up.
Yeah, and the jobs data we got this morning also shows that unemployment's ticking up, even if it's slightly, which is
you have a dual mandate with the Fed. Inflation at 2% or whatever their target is, and maximum jobs. I got news for everybody. Whether inflation's at 2 or 3% really doesn't matter. What you need to do is you need to have an economy that is not restricted, so businesses are more likely to expand and produce, and you hurt demand with oversupply, because that is good for everybody. Keep inflation down like that, more people have jobs, and there's more product out there.
Okay. Let's talk about SoFi. So
Real quick.
Yes, go ahead.
Didn't I tell you don't bet against Apple?
You did indeed. You said don't bet against Apple. And let's talk about Apple before we get to SoFi. So did I say market open on the title? I'm sorry, guys. I meant to say market close. I'll change that. I don't know why I always mess that up. Okay, Apple. So I mean, your boy cooked up some buybacks, and that's why the stock is up. So what do you have to say about Apple?
That anybody who is bearish on Apple is crazy when you have that big of a war chest and you generate $100 billion in profits a year. You can manufacture earnings the same way they have for the past 2 years. They're going to continue to do it. And don't be surprised if they have an AI that is geared toward the customer instead of business, and you get a personalized AI assistant with the next series of phones. Don't be surprised.
Okay, but I hear you. However, they're growing 2% year over year, and financial engineering only lasts so long until things fall apart. I mean,
but once again, it's very hard for things to fall apart when you're generating that much profit.
Yeah, but you're also paying a premium on the profit. With like the PE is now 33. Like, is that a good PE to pay for something growing 2% year over year?
Yeah, they're going to keep buying back shares. Were they doing buybacks this quarter, 46 billion or something like that?
I mean, 100 billion. That's what they announced.
No. But what did they actually buy back this quarter?
Oh, I'm not sure. Yeah, it's about 40 billion. Yeah.
Yeah, I didn't look at the chart. I think it was something like 46 billion or something like that. I mean,
let me ask you a question. This AI phone. By the way, I came up with this idea this morning that if they announce the new iPhone, it should be called an AI phone.
17-AI.
No, like literally a iPhone.
Okay. I don't hate that.
It's a good idea, right?
Yeah, I like it.
I patented that, so you can't steal it if you
Right.
try to steal it. Okay. So what do you think, given you're a smart guy, I would imagine, that this AI phone is going to be able to do that would make you rush to go buy it for $1,500?
I think you're going to have a rush no matter what, because I mean, I know people that get a new phone every year. You're going to have people that buy it. But I think the next evolution is Siri. Look, nobody likes Siri. It doesn't really do what people want it to do. What if you could say, Siri, book me a flight from JFK to LAX? And it just did everything to you in your confirmations in your email. I think that's where you're headed with it. Same thing that you can have an assistant do, this will do for you within a relative, Siri, find me XYZ, I want to purchase this. Get me the best price on, I don't know, a TV.
So you think people would rush to buy the iPhone and upgrade because of like these personal assistant type of tasks?
I think if it makes your life easier and it takes remedial work out of doing things, I think there'll be a rush to buy it.
Would you rush to buy it if it could do those types of things?
Maybe.
This is the problem, Steve. This is the problem I have with you. Okay, this is the problem I have with you. You didn't rush to buy the Vision Pro, but you're so bullish on it. You're not saying you're going to rush to buy the AI phone, but you're telling me I should be excited for Apple. You're telling me to spend my hard-earned money on Apple stock, but you're not buying their products, Steve.
With the Vision Pro, I said it needs to be smaller in the next couple of generations. Is what I said. I don't really go anywhere. So once again, it depends what the features are. If it could accomplish tasks that take time out of my day, then I would seriously consider upgrading if I wasn't in a position to upgrade prior. But for people who are very busy and do a lot of things, and if this can buy back their time, which is upgrading the phone, I think you'll see a big demand for it.
I think you're right. I don't know how.
And don't forget, they can turn it into a premium service where you have a free version and then you have a paid version for a couple bucks a month that does all these extra things. So don't be surprised if they turn that into a service model also down the road.
Yeah, look, I wouldn't bet against Apple. I think shorting it is stupid. But in terms of the best risk reward, it's tough to say Apple's like the big one there.
And I don't think anybody's saying that. I'm just saying betting against Apple is crazy.
Okay. We got Thomas in the chat who says, Steve, can you adopt him?
No.
Okay. He told me to ask you that, so I just asked you that. All right, SoFi. Let's discuss SoFi. So I'm putting Steve's article in the chat. Anyone who cares about SoFi, please make sure to give it a read. He works hard on these articles. What were your raw thoughts before we get into the nitty-gritty on the sell-off after the triple B?
I mean, first I bought more.
Okay.
Do not follow me because into that. But I think the market is upset about Q2 guidance, and it's going to be, if they come in at the high end, it'll be the second quarter-over-quarter decline, which has never happened before in SoFi's history of being a public company. It'll be decline on adjusted net revenue and adjusted net EBITDA. So that's not necessarily a great look, and I think people are upset about that. But 3 months doesn't matter. Doesn't matter. Look at the full year guidance. They increased again. Last year, they increased guidance for the full year 3 or 4 times. They gave guidance last quarter when they reported fiscal year 2023. Q1 beat top bottom line, and they increased guidance for 2024.
Why was Noto so boring on the call and uninspired?
Who knows?
But you agree with me, right? That was a bad call.
He wasn't his normal self. Don't forget, it's like when he does that call, what is it, 4:30 in the morning?
Yeah, but that's not an excuse, dude. That's not.
Nah, you gotta give him some slack.
He runs this is a public company with millions of shareholders.
I get it.
I mean, this is not.
Look, he wasn't himself.
Also, they can do it after hours. I mean, no one's putting a gun to their head saying it has to be in the morning.
I mean, I would rather them do it after hours. The bottom line is that they continue to deliver on the earnings expectations that they set forth. And this is just more credibility that 55 to 80 cents in 2026 is attainable because they continue to beat earnings. They continue to increase guidance. If you look at that low end, what's SoFi trading at right now? 14 times, 15 times on the low end for 2026 earnings. I mean, they're delivering. It doesn't matter. 3 months, 1 quarter guidance. Street doesn't like it, whatever. If you're in for 3 months, that's not an investment. That's a sideways trade.
What do you think? What do you think, Pouncher, right now, 23.55 after hours? What do you think SoFi needs to do? Just like Carp, he got the company to be GAAP profitable. You know, they did $1 billion share buyback, like initiation, right? There were some sort of things they started to do when the stock was at $7-8, same as SoFi.
You need 3 things. I mean, the big thing would be if they launched a brand new investment version app. That was fantastic. I think that would be really big. But the 3 things that I think they really need to do, and it's going to take some time: business banking across the board. You need asset management arm where they can also be a custodian for 401ks and 403bs. So not only does a company have their business checking accounts with them and all that stuff, they can do the lending through them, but they can also have their 401k or 403b plan with them. That's huge, especially since SoFi has its own ETFs. You get the management fee on the ETFs and the custodial asset management fee for all the plans. And then they got to win some RFPs on the tech platform. If they can show this tech platform is really real, because it is real, but you need some big names. You get Citibank, you get the USB, Deutsche, Wells, one of these people to.
So you're saying the B2B tech side of the business needs to really show significant growth, essentially, for this to.
Because that's how you get a hybrid multiple. Because without that, it's very hard to say that it should be valued as a tech company or a hybrid multiple.
Okay, so but here's my question. Right now it's $6.95. Are they undervalued as a bank if it's just a bank, or fairly valued?
It's kind of a loaded question.
I mean, because I think, and you don't have to give an exact answer, but I think you would agree that it's hard to say the stock should be $15 if it's just a bank, right? If
it's just a bank, there's less of a reason to give it a big premium.
Yeah.
But once again, the big difference between them and Ally is they own the entire back end for tech. Ally doesn't.
Right.
You know, Ally's paying somebody to do their engineering, to do their hosting, and to do everything. And they also don't have the ability to sell that platform to their competitors to generate recurring revenue. SoFi owns the entire back end. They decrease their operating costs, and they can generate revenue from their competitors and peers. So I think that that's worth a premium. And if they can start scaling that, I think it's a big premium that they should be given, considering that they're in a position where they can control a reasonable size of that spend that happens every year.
Do you feel this member growth is a little iffy in terms of how they're reporting it? Because how many of these people are actually active, right? Or do you not care that much about this?
I mean, I think that that's a good question to ask if deposits slowed,
right,
and even declined. But you had the biggest quarter of deposit growth also, and it wasn't the biggest quarter of member growth. It was the second biggest. And here's the other thing. 90% of their people are direct deposits, so they're very sticky. So they're less inclined to leave. Like, that's the critical number. So when you have a 90% ratio for direct deposit, you know as well as anybody, you start setting up your life like that, the last thing you want to do is go to another bank and redo all those things.
I'm looking at this chart you have about Q4 deposits in the article. You highlighted 3 of them below.
Yeah, they didn't report yet.
Oh, they didn't report yet. Okay.
So I didn't have the new numbers.
Okay, so SoFi is $21 billion. It's the lowest out of all the banks, but the point is that they're making a ton of momentum, right?
Yeah, the point is that they're growing, and their target demographic is not me. It's not older people. It's younger people who are just starting their careers. So, you know, people are, you can't expect them to grow by 50 billion a quarter. Like, they're growing at a good rate, and it is allowing them to have a bigger balance sheet to write more loans. And look, they've done a very good job at mitigating risk and generating originations and everything. It's not something I would be worried about. This is a company that Noto's a finance guy. He did what he had to do this quarter to reduce our expenses in the future and generate a profit. The move was strong, cleared out over $2 billion worth of debt. I mean, they make these moves, and if people still question their charge-off rates and everything else, I don't know what to tell you. You either believe in what they're going to accomplish or you don't.
So you're buying more SoFi?
I mean, I did, not a huge amount, but I definitely dollar cost averaged in one of the accounts, and I'm keeping my eyes open to see what it does. But yes, I am still a buyer.
Okay. Any thoughts on Fortinet? They had earnings yesterday. Do you have a big position there?
I didn't read it yet. I got a notification that it
okay.
beat but sold off, so I need to read through it.
But you have some Fortinet, right? Or
I did, and I got out of it because it jumped like 20%. I took a very quick gain.
Okay.
Because I rolled the money into either SoFi or Palantir. I don't remember where it was.
Okay. Ray from the chat says, Amit, can you ask Steve if I can come over to his house for dinner?
That would be a no.
You wouldn't let some stranger come over to your house for dinner?
We abide by the Second Amendment, sir.
I love it. Okay. So we have Nvda coming up in a couple weeks. Are you scared for them, or you think they're going to crush?
I'm not in it. I think that they're going to do good, but I mean, look, at some point, you got a lot of stuff forward with them, and that's what I'm worried about.
Okay. Also, I forgot we had this week Amazon, which is another one of your top 5 stocks. What did you feel about their growth?
Pretty amazing.
Yeah, I think AWS growth was incredible, 70% year over year. Operating incomes were at 10%. That was the high since 2021, so I thought that was exciting. And then, we got good jobs data today, so I think that's why they got a little bit of a pump that they needed a couple of days ago after their earnings. All right, so I guess last question, Steve, is if you had to choose right now, here's an interesting question. Between buying SoFi and Palantir, given we have Palantir earnings and SoFi just had earnings, which one would you pick?
I mean, right now, I think there's more short-term upside on Palantir going into earnings. It's hard to say no, right? SoFi had earnings and the market sold them off. I mean, pretty hard to pick SoFi over Palantir for short term. I think long term they're both going to do well, but if I had to pick one for next week, I think you got more catalyst for Palantir.
Karp said today the company should be 20 times bigger than it is right now in 10 years.
Yeah, I saw that.
Do you think $1 trillion is possible for Palantir?
Yeah, 10 or 15 years, yes.
Oh, you actually think it is possible? It could happen.
I mean, anything's possible. Is it probable? I don't know. Salesforce is only 350. Oracle's like 400 or something like that. Adobe's 400 or something. So is it possible? Yes. Is it probable? I think we need to see what the next 5 years is. But I don't think them being a $200, $300, $400 billion company next 10 years is crazy. I think that's very doable.
Yeah.
Getting to $1 trillion, I don't know. We'd have to really see.
Okay, last question for you, Steve. Bitcoin right here, trying to get to 63,000. It was at 50.
Who cares?
It was at no. Just let me finish.
Who cares?
It was at 57,000. First of all, who cares about these Ripple videos you keep sending me? Okay, like no one cares.
Do me a favor. Just do me a favor and watch it.
Steve, Ripple's not exciting.
Just do me a favor and watch it.
Okay, so do you have any thoughts on Bitcoin at all?
Yeah, 2 words. Who cares?
Okay. Thank you, Steve, for joining. We appreciate it.
If you think about it, the easy money's been made. If you buy Bitcoin at 56 and it goes to 112, you made 100%. You made a double. Okay? You can make a double in so many things if you have a year, 2 or 3. So the easy money's been made. That's why I say who cares?
I agree. I just think it affects so
really
much
put that in perspective.
No, I agree. I mean, even if you bought it at 30.
Think Palantir is going to double? If you think Palantir is going to double in 2 or 3 years, and you think Bitcoin's going to double, 100% is 100%.
I agree. I just think Bitcoin affects a lot of other companies, right? So that's why it's important that Bitcoin.
Why?
Well, if you have options on certain companies that benefit off Bitcoin, that matters.
Oh, MicroStrategy? Who cares?
First of all, a lot of people have MicroStrategy, Robinhood, CleanSpark, all these companies, right? It's a trade of
Okay,
the
great.
year.
Once again, who cares?
It's fair. Fair point.
Anyway,
What are you doing tonight? Are you doing anything? Or you're just watching TV?
no, I'm gonna write. I'm actually gonna lose you because I'm about to get in the elevator.
Okay, yeah, we're gonna end it right here. Thanks, Steve, for joining. We'll talk to you later.
Later.
Bye. All right, folks. Why is he so mad at Bitcoin? Steve just never cared about Bitcoin. He likes crypto. He just never cared about Bitcoin. So he's always been, if he got some Bitcoin at like $8,000 or something, I'm pretty sure he would love Bitcoin. But that's it for me, folks. Thank you for being here on the Market Close. We'll have Pouncer Weekly at 11 p.m. tonight, and it'll be the earnings preview. A lot to discuss going into Monday. Monday's going to be a very exciting day. And then Monday, 3:30 p.m., Arnie and I will be live. And Adam, if you want to join, free invite. I think Vince might come on. And we'll discuss Pouncer earnings and see what we got going on. Thank you, everybody, for joining. I appreciate it. It was a very, very fun week. Had a lot of good earnings. Companies seem to do pretty well. And the jobs data this morning, along with the ISM data, shows that maybe inflation is going to cool down faster than we think. Thanks, everybody. Appreciate it. I'll see you guys tonight, Friday, 11 p.m. for Pouncer Weekly. Bye, everyone. Have a good one. Good night. Probably we'll have a Saturday live as well. Probably we'll have a Saturday live at night as well. Oh, and TJ, the episode TJ will be tomorrow as well because we weren't able to do it today. So TJ and Saturday Live will be tomorrow. Bye, everyone. Have a good one.